Bismillah.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Alhamdulillah. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala Sayyidil Mursaleen, Sayyidina Muhammad wa ala alihi wa ashabihi ajma'in. Amma ba'd. Welcome one and all participants on Zoom, participants on Facebook Live. Narahibu bikum. We have a group on podcast as well, an Arabic speaking group that will be translated inshallah. So we have abundance of participants quite keen to understand exactly what would be this post-COVID-19 world looking like, specifically for Islamic finance and Islamic banking. My name is Ziyaad Mahomed. I am a faculty at the university, the Global University for Islamic Finance, INCEIF, based in Malaysia. And with us today, we are honored to have a very high-profile set of panelists. From the far right, my right at least, is Professor Dato Azmi Omar, who is the President and CEO of INCEIF. And together with us also is Dato Mohamed Rafique Merican, who is the CEO of Maybank Islamic. And we have Arsalaan Ahmed, who is the CEO of HSBC Amanah right here in Malaysia. So we hope to hear some excellent insights from them in terms of the global impact on Islamic finance and Islamic banking in the post-COVID world, as well as Malaysia. So we will be focusing on Malaysia and the impact of COVID on Islamic banks, Islamic banking customers in Malaysia. And we will also be talking about that very important introduction through Bank Negara, the principle or policy on value-based intermediation. So there's a lot that we have lined up for you this afternoon. We only have an hour. We welcome our panelists, Dato Azmi, Dato Rafique, and Brother Ahmed. Assalamu alaikum wa rahmatullahi wa barakatuh. We thank you for joining us, honorable participants. Let us kick off, first of all, with the bigger picture. So I don't think that any one of us has been spared the bombardment of information and news from every angle, whether you put the television on or the social media, any form of communication that we attempt to have outside our condos or houses or offices is going to be somehow connecting with this crisis that the world is facing right now, the COVID-19 pandemic. But the impact to different sectors is naturally quite different. We know that COVID has actually halted all travel and tourism in most countries. We know that many countries are still in full lockdown. Others are in a conditional restriction of movement. And the impact to economy is huge. I don't think that we fully understand or grasp the impact on economy as yet. We are still amidst this pandemic. So the health concerns are mounting, but beyond that, we also have the economic concerns. Now, certainly from an Islamic perspective, we always look at the positive. We look at how we can come out of this, not just struggling and learning from the lessons, but coming out of this much better than we were. So in order to achieve this, we do need to understand the overall impact on the economy globally, how Islamic finance and Islamic finance education can actually contribute to a post-COVID-19 world, and certainly how Islamic banks can come out of this, can survive, can look after their financing customers as well as their deposit customers. So we will be covering some of these aspects. Please feel free to send your questions through via Zoom or Facebook Live, and we will try and answer some of those questions. Bear in mind that we do have time constraints, so please do forgive us if we cannot address all your concerns. So let's begin with the first question with our honorable guest, Professor Dato Azmi Omar. Dato, there is a big concern of how COVID-19 or post-COVID-19 when we look at the impact on Islamic finance, Islamic banks globally, not just Malaysia, but the Middle East, Africa, Europe, what would you say we should look out for, or we should be concerned about in terms of this post-COVID world, specifically to do with Islamic finance?
Okay, thank you very much, Dr. Ziyaad, the moderator, my colleagues, panel members, Dato Rafique, as well as Asst. Ladies and gentlemen, Assalamu alaikum warahmatullahi wabarakatuh, and a good afternoon. I would say still Ramadan Mubarak. We have almost 8 more days to go. So I'm sure all of us are taking advantage of these last 10 days to maximize our ibadah, our da'ah, to ensure that we achieve what we want to have, not only in life but also in the hereafter. So I'm sure all of us are praying, doing all these rituals during these last 10 days. Let me go back to the question raised by Dr. Ziyaad on the issue of COVID-19 pandemic and the impact to the global Islamic finance. Let me give you a perspective first before I go into the specific questions. If you look at the COVID-19, nobody expected it last year. For example, even December last year, when we finalized our plan for 2020, even INCEIF, we did not incorporate this into account. And we thought that the trend will continue even better this year than last year. And then suddenly, in Chinese New Year, you have this COVID-19 and everything goes haywire, and we have to go back to the drawing board. So if you look at COVID-19 global pandemic, I would say there are 3 major crises. One is the health crisis. Secondly is the economic crisis. And third is social crisis, where a lot of people are not really discussing on the social crisis. But let's just focus on, to a certain extent, the economic crisis, or particularly the financial crisis. Going back first to the health crisis, let me give you some perspective. According to World Health Organization, as of yesterday, globally there are 4.4 million individuals infected by COVID-19, more than 300,000 deaths so far, more than 1.5 million individuals have recovered. I think that's also the good news. And 187 countries, so almost, I would say 98% of the world are affected by COVID-19. In Malaysia, we have 6,819 individuals infected. Alhamdulillah, in terms of death, we don't have significant number, only 112 deaths, and 5,351 individuals have recovered. So that's the good news. However, if you look in the context now in terms of the world economy, in April, IMF issued a paper in terms of the world forecast, taking into account COVID-19 pandemic. IMF studies estimated that the global GDP will be expected to be negative, particularly in the range of -6.1%. So which means that there will be a global recession, estimated to be -6.1% for 2020, and the recovery is expected to be in 2021. However, in the context of advanced economies, you will see that advanced economies, particularly United States, Euro area, Japan, United Kingdom, Canada, all of them will be negative. And again, as I mentioned earlier on, they are expected to be a range of 6.1%. Coming back to the region, in our region, ASEAN 5, ASEAN is also not secluded from this. Therefore, ASEAN is expected to be negative 0.6% for this year. So ASEAN is negative 0.6% this year, expected to go down, recession. The only countries in the world, the developing countries and emerging countries, are only China and India, where they are expected to have positive growth for this year. All other countries are expected to be negative for this year. So given that those projections, what is the projection for Malaysia specifically? Well, the Malaysia is expected to be, according to Panagara, the growth for this year is between -2% to positive 0.5%. So again, it's in most likelihood it will be a recession this year for Malaysia. Losses from the shutdown are estimated to be around 25% of GDP. And according to the Department of Statistics Malaysia, the country is expected to record an unemployment rate between 3.5 to 5%, which is quite similar to the 1998 financial crisis. And as Malaysia knows this, many self-employed individuals, micro institutions, SMEs are greatly affected by this pandemic. And they are the one that provides the largest number of employees in the country. So let's look at what governments of the world have done in order to address this pandemic. Of course, one thing that is quite common done in many countries is, with the exception of a number of countries, is the implementation of what we call in Malaysia MCO, Movement Control Order, or lockdown in some countries, where certain essentials, non-essentials are closed, such as shopping, malls, restaurants, and so on. Schools are closed. And the idea of having this partial lockdown is to ensure that there is less infection or to flatten the curve. The government has also introduced a number of relief measures, such as, for example, financial support to selected groups, to micro institutions, SMEs, to B40s in Malaysia. And these measures include deferral tax installments, moratoriums, and it's quite controversial in Malaysia, the issue of moratorium, in terms of tax measures such as tax deferrals, wage subsidy programs, and so on. On top of that, government is spending a lot of money on medical equipment, on test kits, on personal protective equipment, ventilators, and so on. So these are the measures that government has been doing in order to implement and to address the issue of COVID-19. Again, in the issue of moratorium, some countries have a 3 months moratorium, some countries 6 months moratorium in terms of payments to banks as well as to insurance companies, some even longer. So what is the impact to Islamic Bank first in the context of this COVID-19? If we look specifically in the case of moratorium, I've seen a couple of Islamic banks, particularly the small Islamic banks, in countries where you have 1 or 2 Islamic banks, and that rule is cut across, whether irrespective of whether they are Islamic banks or conventional banks. Islamic banks tend to be small in a number of countries. Therefore, when the central bank implement moratorium, one of the immediate things that they face is the issue of what we call the liquidity issue. They face liquidity. Suppose customer cannot pay for 3 months or given moratorium of 3 to 6 months. Islamic banks immediately face a big pressure in terms of liquidity. They will lose a substantial amount of money. And that will impact also their depositors' return as well. So not only in the context of they want to support the customers, but at the same time, they have also to consider their own safety and the liquidity requirements as well as the impact to their depositors. Secondly is in terms of the NPF, non-performance financing, as well as the provisions. That is also another issue that the bank has to face. And third is on the issue of Sharia, whether the accumulated profit can be charged or not. These are some of the issues being debated until today. On the part of Sukuk, S&P, just before COVID-19 pandemic, they estimated the growth of Islamic finance this year to be about 5%. And that includes Islamic banking, capital market, Sukuk, and so on. However, I have yet to see a new revised figure. And based on what has been estimated thus far, we will expect that Islamic finance assets will grow lower than 5%. Unless banks are able to address this, as well as governments are able to address this by issuing, for example, pandemic sukuk. Okay, pandemic sukuk. So we have seen a couple of countries have issued bond, particularly, in order to raise funds to address the issues, the COVID sukuk and the COVID-19 issues in their country. So far, we have not seen any governments as well as corporates that are going to issue sukuk to address COVID-19. Okay, so that could be one of the issues. I stop at this. I have, in terms of some other things, in terms of the responses that we can look at from the Islamic finance point of view in order to address some of the issues faced by banks as well as individuals during this COVID-19 pandemic. Thank you very much.
Thank you very much, Dato Azmi. Some of very important points you've raised with regards to the global economy as well as the Malaysian economy, as well as some important statistics with regards to COVID, the infection rates, recovery rates, and fatalities as well. Thank you very much for that, Dato. We will certainly come back to you just now. Let's turn our attention to the Dato Rafique Merican, CEO of Maybank Islamic. It's an honor to have you on the panel once again. We do appreciate your time. I think from a Malaysian perspective specifically, Maybank, is the stalwart in terms of the banking industry, and then from Islamic banking as well. Now, BNM as a central bank would want to stimulate consumption expenditure to try and drive the economy. And in order to do so, they've reduced the cost of funds. But to reduce the cost of funds does not necessarily mean that you will have a line of clients waiting for advances in terms of Islam
coming into play in the second half. And one factor alone may not do it. Lower cost of funds, for example, has to also work in tandem with a heightened level of economic activity. And then you have to add a dose of consumer confidence as well, right? So if in situations whereby employment is going to be a concern, we did see consumers holding back with the spending on discretionary items, for auto, for example. We do see expenditure on essential items, utilities, that is happening. But investments, for example, is taking a back seat. We do see, in fact, some level of withdrawals for use during the MCO period, even at a corporate level. Yeah, we didn't see any demand to increase capacity because the outlook continues to remain fairly bleak, right? So I would say that the pace of recovery will depend on normalization of business activities coupled with expectations of a heightened level of demand heading into the end of the year.
Thank you very much, Dato Rafique. So just a very quick follow-up question on that. Certainly, we do expect that the economy will contract. However, there would be a need for financing. So from an Islamic bank perspective, do you believe that the financing portfolios would be severely impacted, or would they be able to recover easily if the pandemic impact is quite limited, meaning if we start opening up business earlier than expected?
I think for as long as a vaccine is not discovered or found, then the level of normalization will probably be a bit more perfected, right? Say for example, travel for business, that's one. Normalization of some of the disruptions that we saw in the supply chain, that will also take time, right? Also, external factors, global trade, for example, whether there's going to be a repositioning of what has actually been the trend of China exporting to the world, manufacturing for the world, right? Oil prices, right? Where will it stabilize? At what level? I think those things, even if we actually recover from the lockdown period, those factors will continue to have a bearing on demand for credit. Because if you have rather a weak outlook for capacity for demand, then capital expenditure may be hindered. Government expenditure may actually provide some stimulus to the economy, but the momentum will actually take time because any sizable construction activity will actually go through a period of mobilization before they start to actually draw down on some of the more major physical works on the ground. So I think any time within the next 3 to 6 months, for us to expect things to normalize back to say what we saw in late last year, I think it would still be a stretch. That's my view.
Thank you very much, Dato Rafique. These are quite valuable points. Yes, it all depends. In fact, it all depends. We just are completely in abeyance for a lot of what we can expect afterwards. You know, Allah knows best. We try and resume as quickly back to normal, and we hope that the entire world's economy will look at this as a good lesson and, of course, recover as soon as possible, inshallah. Brother Arsalaan Ahmed. Arsalaan is the CEO of HSBC Amanah in Malaysia, and it's an honor to have you. Thank you very much for sparing time to join us on this most important discussion and topic.
Thank you.
You have been part of IBFIM and, of course, quite involved in the VBI strategy that was implemented through BNM or rolled out for Islamic banks. And a number of banks have been involved. HSBC Amanah has also been involved in that. What would be this VBI, value-based intermediation role of Islamic banks now in addressing the economic issues, the social issues in this new norm of business post-COVID or even during this COVID environment?
Thank you very much, Dr. Ziyaad. And I think it's a question that talks about how do we make decisions when there's an existential issue? And that comes down to the core of what is the nature or should be a nature of an Islamic bank. Before I jump into speaking about that, and I'm going to try and focus it onto something specific because there's multiple areas we could talk about here. I just wanted to give you a slightly shocking statistic, which was at the end of 2019 in Malaysia, till March 2020, for banking assets in Malaysia, the conventional assets grew by 78 billion, according to Bank Negara, and Islamic banking 2 billion. So that's a 4% increase for conventional banking off of its base, and 0.25 for Islamic banking. And as Dato Rafique mentioned earlier, typically that's not the case, right? Typically Islamic banking grows faster, and there's a reason for that, because people are drawing down existing lines, and banking capital in conventional is larger. That's why that's happening. So the question then becomes, let's take that microcosm of Malaysia. How can we stimulate growth within Islamic banking? And what would be a values-based way of doing that? And what I want to do, so this example I'll give of Malaysia largely, but it will be replicable in most other geographies where there's a material Islamic banking presence, is I want to talk about SMEs. So SMEs in most countries, what they do is they employ typically over 60% of the population. And 60% of the population is therefore getting their salaries from SMEs, and therefore if they've got personal obligations with banks, that's where those are going to be fulfilled. So there's a cycle here. If you focus on SMEs, you address retail as well. And what we're finding, the IMF blog noted this on the 23rd of April, in Malaysia, in Q1 of 2020, 91% of SMEs had their revenues down, probably understandable. 75% of those were more than 20% down, greater than 20%. And the key challenges they faced were around cash flow, short-term financing obligations, high levels of leverage, and 88% of them had less than 3 months left of cash for their business. You can imagine the impact that will then have on the banking system when those NPLs go up, and also on the retail as they go out of business, don't pay people, and people can't pay back their obligations. So the question is, how do we support through an Islamic finance ecosystem, not necessarily just banking, how do we support this? Now, the first thing is how can we support new SMEs? That might sound a bit odd, but this speaks to the point that Dato Rafique was saying around stimulating economic activity in order to increase consumption. Now, back in the day, actually what you'd find is waqf assets were used to stimulate economic activity, commercial activity, something that's probably not spoken as much now. And I know this is an area that INCEIF has researched on. And that's just kind of an important part to speak about when we talk about Islamic finance generally beyond banking, and I'll step into banking in just a moment, and to say that, look, social capital has a role to play in this time, and we understand its social impact of using waqf for actually stimulating or other sadaqah and so on and so forth in order to get new businesses up and running because of the cycle and importance they play in an economy. So that's one point when we look from a values perspective. But then we need to look at the existing SMEs. And in order for us to look at the existing SMEs, they broadly have three issues. One of them is cash. One of them is related to just general relief of obligations to pay. So cash flow for working capital, relief of obligations to pay, financing. And the last one is really related to the bank side, which is again on Mpls, and I'll come on to that. So when we talk about the pure essence of Islamic financing, and we talk about a company needs cash, especially an SME, what can they in cash straight away? Well, actually it's inventory. And if you think about a typical structure where a Islamic bank could literally buy inventory, which is something that conventional banks are not licensed to do, that is a method of providing cash into the system. There needs to be broad parameters around there to make sure there's stability of the financial institution, but we need to start thinking about those types of contracts and how that supports SMEs. We can also think about it from pre-production as well, using salam transactions, the pure original nature of them. So key components there, we can talk more detail about it later. When we talk about relief, we talk about payment relief. Now, one of the issues that we have in Islamic banks is we're supervised in the same environment as conventional banking. Therefore, we have to have similar standards of IFRS 9 and all of that type of stuff. And what happens is, when you have that, it's difficult for Islamic banks to say, I'm going to take an economic impact on returns, and I'm just going to push out some of your payments with this idea of a moratorium, because those are intrinsically linked with time value of money and how those things are accounted for. And that actually makes it more difficult for Islamic banks to do that. I think that that's an area that's more a day two discussion around whether certain standards, when they use time value of money, should apply to Islamic banks and how that's supervised. I think that's a day two conversation, but certainly relief is something that SMEs need. And the last thing is, actually, how do we support MPLs of banks? The reason is that banks effectively take depositors' money, and we're talking about individuals who have a set salary a month, who, if they could save an extra 100 ringgits or 100 dirham or whatever it might be a month, would make a big difference to them and their families. We have to protect them as depositors and not just keep thinking about the financing side. In order to do that, we need to make sure the bank is robust. And again, using structures where banks can be able to either pass risk through to the right types of people through a pass-through mechanism like we have investment account in Malaysia, or even be able to tap certain types of capital to support banks to be able to take the hit of MPLs. So those would be values-based methods. Some of them can be done now, some of them will have to be looked at for the next pandemic.
Thank you. Thank you very much, Brother Oz. These are very enlightening points. We're going to come back to you, inshallah. We're going to talk about this concept of value-based intermediation and perhaps some of your ideas on how we can apply Islamic social finance within the value-based intermediation space, inshallah. But let's quickly go back to Dato Azmi. Dato Azmi, you are the president and CEO of INCEIF. When it comes to universities and collaboration with INCEIF on issues with regards to COVID and SMEs, things that Oz touched on, things that Dato Rafique also touched on with regards to the economy as well. How do you see INCEIF's role and other universities as well in actually collaborating to assist in solving the economic woes from the Islamic finance side?
Okay, let me unmute. Okay, now I'm okay. So if just to echo what Oz mentioned earlier on about, the role of Islamic banks particularly in addressing COVID-19, as well as some of the solutions. Let me take the case of SMEs first. See, SMEs, apart from requiring of financing, they need a place where they can market their goods. And in the context of COVID-19, obviously, you cannot have a physical place now. Okay, so it's very limited in terms of having a physical place. So which means that they need access to the e-commerce market. But the question is, do they have that access? Do they have the capacity? Do they have the training in order to bring about their business into the e-commerce platform? And secondly, how do you then link up with the payment? Apart from having an e-commerce platform, you need to link up with a payment platform in order for them to receive money. Okay. So that's the second component. So I'm talking about one is the e-commerce component. The other one is the payment component. And the third one is the financing component. As mentioned earlier on, SMEs require financing. Okay, and going to a bank physically now can be very limited. So how do you then create a platform based on a virtual platform where SMEs can access to this financing? At the same time, the financiers have two important components. One is the credit tools, credit risk tools, in order to assess those customers, the micro and the SME customers. And finally, also to the financiers, they want to see what is the impact of their financing to those customers. Okay, so if you bring it together, you have a very good ecosystem. And this is what INCEIF is trying to do now. INCEIF is working with a couple of bodies, multilateral bank, together with the technology innovator in Malaysia, including MDAC, to come up with a platform in order to bring all the parties together. But one important component that we look at is the role of Islamic social finance, i.e. the usage of zakat, sadaqah, and wakaf. Let me give you an example. I did mention earlier on, some of the micros and SMEs need capacity building. We can use zakat and wakaf for capacity building. You know, using those money to develop the capacity of the micro and SMEs. Okay, so zakat and sadaqah could be one of those sources of funding to develop those things. And secondly, the usage of waqf, although as mentioned earlier on, wakaf or waqf can be used for many purposes. It can be used for financing of micros as well as SMEs. So waqf fund can be provided to those micros and SMEs. So what we're trying to do at INCEIF is we have developed a mechanism whereby we bring in the element of e-commerce, the payment platform, the financing platform, as well as the Islamic social finance platform together, so that this can be integrated rather than having a myopic solution or a solution that is silo-based. Bear in mind, having an Islamic social finance platform together linked with the impact indicators, that will give assurance to many people. For example, if you pay zakat, you're not sure whether your zakat money is going to the right purpose. So having what we call a transparent kind of platform, and particularly if you use blockchain, then you will be able to see from end to end, which means that when somebody pays zakat, you know that zakat money is used to pay to particular microfinance or SME in order to receive a specific training. So it's very clear end to end. So this is what INCEIF is doing with a number of organizations. So we believe that the research done by universities, not only by INCEIF, but also other universities, must be driven by the requirements of the nation. Okay, by the requirements of the nation. We need to have solutions for this. We have been talking about usage of zakat, wakaf, sadaqah, but it's all theory. But there are ideas and specific implementations that are put forward by INCEIF, a research center And these specific ideas are doable and can be implemented quite easily. I give a specific example. In Indonesia, for example, if you have been to Indomart, I'm sure there are some Indonesians there. If you have been to Indomart, Indomart is similar to 7-Eleven. You know, one of the good things they do there in Indonesia is that after you pay, okay, for your goods, let's say the price is, let's say, 850,000 rupiah. Okay, so you give 900,000 rupiah. So the cashier will ask you the balance of 50,000. Do you want to take it back or do you want to donate to a particular institution? And they have this list of institutions under sadaqah or wakaf or zakat. So you just choose, you say, okay, now I want to give to this particular body. For example, dompet du'afa in Indonesia. So your 50,000 goes immediately. So it's very easily done. You know, it's seamless kind of thing. So I think here in Malaysia, we must integrate the banking with the Islamic social finance to make it seamless for individuals to use their money. For example, the returns that they get from their deposits in Islamic bank, they could say, okay, I want to give this money to this particular charity as wakaf or as sadaqah or even as zakat. You know, linking those kind of things. That can be done quite easily. So small number, yes, but as you build up, the amount can be significant and banks can use this in order to implement the value-based intermediation that we talk about. I do agree with us that, as well as Dato Rafique, that when we look at Islamic bank, we have to consider both the depositors as well as the customers who are taking money from the bank. There are depositors who are concerned, people who are above 60, they are retirees, they live from the returns from the bank. So if banks are not able to provide returns, then obviously their deposits will be affected and their livelihood will be affected. So Islamic bank must balance this. So balancing the needs of the community, the customers, the depositors, all of these are very important in the context of the value-based intermediation. Thank you, Dr. Ziyaad.
Thank you very much, Dato. Very valuable comments there. I think as a summary, what you have said, Dato, is that Islamic finance universities or universities involved at any level in teaching Islamic finance should now look at a lot of applied research and how they can impact the community and the society rather than only looking at theoretical aspects. Certainly theoretical aspects are very important and they form part of the academic ecosystem. But right now in a COVID-19 world or post-COVID world, we will be looking at how we can assist those through Islamic finance and of course Islamic social finance solutions. Dato, you've talked about quite exciting initiatives and research approaches taking place at INCEIF, the SME platform approach or the zakat, and you've mentioned the fintech, and you've mentioned also, you know, the issue of trust. I'm sure that would be probably based on blockchain as well. So this does support the entire VBI concept as a whole and really takes Islamic finance to a new level. And we've been looking forward to seeing some of those actually implemented in the near future and seeing how it actually starts changing for the society for the better, inshallah. Dato Rafique, very quick question. We are running out of time, but it is a very specific banking question. I know you've covered the both sides of the coin from the economic perspective, the deposits and the financing as well. But Dato Azmi has spoken about social impact indicators. Can we talk a little bit about asset quality indicators at the Islamic banking level? We expect that the crisis is going to have a serious impact on all sides, but how severe would it be on the non-performing financing side and any other asset quality indicators? Because Islamic banking assets generally have maintained a higher level of quality. They've been fairly healthy. When it comes to end December statistics, we've got a ratio of gross impaired financing only at 1.4%, and that has been reducing. So overall, Islamic banks have been handling the non-performing financing fairly well. I know there's going to be an impact, but I'd like to know how severe do you think that impact's going to be?
Okay, so maybe I can probably set the context of the position that not just the Islamic banks, but generally the banking industry are going into the MCO situation, right? So in terms of capital, in terms of liquidity, in terms of gross impact financing ratios, it is at a very good level. Say for example, like for Islamic banks, capital levels were above the minimum 100. I think CET1 was about 13.6%, and liquidity coverage was about 150. So liquidity-wise is comfortable, capital-wise is comfortable. Impact financing was about 1%, but there's a qualifier there. There's a qualifier there. But before I go into the qualifier, is in any situation whereby the resilience and the stability of the banking industry is paramount from a management perspective as well as from a regulator perspective, then going into a crisis or a challenging period, the banks are in good state. They're well positioned to actually handle some of the shocks, depending on the severity of the shock. So for Islamic banks, I think a large chunk of their financing portfolio are the consumer or retail portfolio, the corporates to some extent, but it's heavily retail, right? So if the impact is going to be on the book that is called consumer financing, right, then that will actually impact the severity of the NPF coming to the Islamic banks. For example, unemployment. So when Dr. Azmi mentioned about higher unemployment figures, then the auto portfolio, the credit cards, the mortgages will be more vulnerable, right? So up to March, for example, it is still fairly benign. I mean, it's still at the one handle level. That's data that's coming out from the industry. We have not yet seen the full impact of the lockdown. We have not yet seen the full impact of those industries which are directly impacted. Aviation, for example, tourism-related, hotels, and so on. Now, the savings, as Oz mentioned, they can probably survive for about 3 months, maybe with the moratorium, up to 6 months, or maybe slightly longer. It may be that we may not see big numbers during this period because of the moratorium, but certainly I think probably beyond the 6 months going into next year, there may be a possibility whereby the credit costs, the gross impact financing ratios would be higher than what probably we have seen in years past. Certainly, I think probably if I try to actually equate to, I think probably the most challenging period for banks was the 97, 98 crisis, right? We will not go there yet, right? We were still trying to manage it. The moratorium is a unique solution in trying to actually give space and time for borrowers to actually manage their cash flows and a little bit more time for them to actually recover. So we are actually managing the signs that we're seeing. There are categories of consumers where we actually look at the payment patterns, right? Because the moratorium, we're not seeing it yet, but we are mindful that specific industries whereby they're starting to actually cut cost, they have taken a hit on, say, for example, payroll, oil and gas, for example, aviation, then those will actually start to contribute to the non-performing assets that we might see moving forward. So the banks have not announced yet their most have not announced yet their first quarter numbers. I would say by next week, quite a number of banks will be announcing. Do take a look at signs of asset quality deterioration, bearing in mind that it takes account only March. The second quarter one will probably identify the full impact of any asset quality issues that may actually drag earnings for Islamic as well as conventional financial institutions.
Thank you, Dato. I think, yes, you're quite right. It's going to be a timing issue as well. In fact, the deterioration of assets might not be felt immediately and might be seen in the books coming in a bit later. So next quarter, probably even the following quarter, would then be able to represent some of the impairments. And we hope that, you know, banks can actually recover from that.
So I think,
yeah,
Dr. Ziyaad, I think probably the added point there is that in this valuable period of moratorium, 6 months, is there a way for the banks, together with the authorities, together with the borrowers, work out an arrangement whereby they are given more than a better chance of trying to actually achieve a more stable footing, for them to actually be timely and good paymasters again, right? So this 6-month period is quite critical, because what we do in this 6-month period during the moratorium will come back to, I suppose, give us an outcome sometime late this year or early next year in terms of asset quality. So I think probably Oz mentioned about the moratorium, and I think it does give a breather, but we also hope that there'll be pickup in economic activity so that employment will continue to be the mainstay in terms of addressing asset quality. Recovery is not the issue. I think making sure that people are gainfully employed is more important than making sure that we try to recover as much as possible. Yeah, that one is always going to be a fallback, but that's not going to be the first priority. I think probably based on what you're seeing, the announcement is to make sure that everyone continues to have a stream of income.
Yeah, absolutely. Thank you very much, Dato Rafique. And if the audience would like to read more on that, INCEIF Research Management Center has recently published at least 5 periodicals on this. It's available online. You can log on to INCEIF via LinkedIn or Facebook to be able to read those articles. They are covering the COVID pandemic from an economic perspective in different angles with regards to wealth and health and statistics and the interpretation of those statistics as well. Oz, I'm just going to cover one last question for you, and hopefully I know that you're also seeing some of the questions coming through from the audience. If you could also look at incorporating your answer by addressing some of those as well. But
yep.
You mentioned social finance, and really social finance is seen as a social responsibility, non-profit. It's doing good, but it's really at the back end of an income statement. It's an expense. It's not something that you're going to earn rewards out of. So how can banks, Islamic banks, actually mobilize this Islamic social finance to support the clients and communities without making it overbearing for the banks? Because after all, they are not charitable institutions.
Yeah, so this is and I think this is a critical question, and one that needs to be answered. I'm not sure it gets answered for this pandemic, and we pray that our deeds are such that we do not face another pandemic in the future. But in preparation for such, it's something that we need to get right, this specific question. See, when we look at social finance, we typically park that in a CSR budget that you spend. Which is actually not the correct nature of it. What is social capital when it comes to Islamic banking and Islamic finance? It is something that doesn't require a financial return or even a capital return. That's the nature of the capital. So how can we best use that to have an impact on society? The first thing is, it shouldn't be something we throw into the CSR budget. We need to bring it into the mainstream. But you're right, banks can't just basically, they're not social enterprises. Effectively, they're taking depositors' money and trying to make sure that people's money is safe, and then providing somewhat of a return in a safe environment. That's very important to remember. There's two sides of a bank. But banks can play an intermediary role to be able to match things within the financial system. And so when we start talking about that, and this is to Ridwan's question around how can we serve micro and SMEs, and can we do that with philanthropic money, and do we use distributed ledger technology to do so? The first thing we need to do is start to link those capital pools up and match them up. Generally, they can be philanthropic. They don't have to be necessarily Islamic social finance, but we know that Islamic social finance has a significant amount, and I think NCF is the one who did the research on how much that is per year. Now, the next piece of research needs to be, can we look at the fatwa that will have broad acceptance in order to mobilize that in a commercial sense when we have instances like this? right? So, and then yes, we may use distributed ledger technology to kind of get that out more. That's just a kind of channel almost. But certainly the point that Islamic banks need to look at is what role do they play in mobilizing this capital? Now, they play a role as a central point, but actually we need that capital to be able to come into that system, and unlocking that is the key challenge, and the one that needs to be addressed. There is one point, there was a question here around looking at risk-taking structures. Now, we have to remember, and this is important, banks are really there to make sure depositors are also secure. So we can't start to take equity risk for people who can't take that risk in the profile of the depositors. A question becomes around how can we then segment and profile depositors? Investment account is a way of doing that in Malaysia. We should think about, can banking have a different type of capital come in that specifically looks at being able to take more of risk on these contracts? So that's kind of answering that. Maybe social capital has a role to play in that type of investment, coming in as a kind of like a mezzanine tranche of a bank. That would be very interesting to explore from an academic point of view, that's applied academics. But the one thing I'd like to stop on and leave on is that we have to understand that when this pandemic occurred, when the moratorium occurred across countries, but particularly in Malaysia, we have killed the discussion of form over substance in Islamic banking. They have played a social role slightly more than conventional banking because of the nature of not being able, and it's impermissible to compound profit, or in effect compounding interest, and the positive effect that's happened against someone who's got an Islamic financing and non-Islamic financing. Another time to talk about, but that discussion is officially dead. The discussion is still open around the optimal way Islamic banks can use contracts. So that's a point around stuff we can do within our powers and licenses, such as buying real commodities. That's something that we don't have to change a huge amount, maybe something around the supervisory side of Islamic banks. And the last bit is more actively engaging social capital into a commercial part of the economy, as opposed to just keeping it as a kind of almost philanthropy part and separate. So yeah, so I'll kind of leave it there, I think.
Okay, no, that's excellent. You've addressed some of the questions and some of the queries, so that's excellent. We have run out of time. What I'm going to do is ask each of the panelists in a minute to talk about or their parting message in terms of Islamic finance, COVID. You've covered a host of things. Summarize for us, please, in 1 minute. Dato Azmi, question for you first.
One key recommendation is that Muslims have been talking about zakat, wakaf, sadaqah, and have been using those Islamic social finance mainly for religious studies. Now what COVID-19 has shown that we need to have zakat, sadaqah, and wakaf for science and technology. You know, Muslims are just buyers of technology. We don't develop vaccines until today. Suppose we have Waqf fund. Imagine Waqf fund to use for research in science, technology, in medicine. That would be one of the big implementation of Waqf, zakat, and sadaqah. And I hope that can be done.
Thank you, Dato. Repurposing Islamic social finance tools for dealing with science and technology so that we can actually recover from such pandemics and other natural disasters, as well as human-made disasters, a lot quicker and in a way that is a lot more sustainable. Dato Rafique.
I think probably for me is I wanted to share on the perspective of banks. They have significant reach and coverage, whether through branches, whether through the internet or digital banking space. And during this period of lockdown or MCO, what we did was exactly what Dr. Azmi mentioned, because we saw that some of the smaller food operators, vendors, and so on would struggle to survive if they don't have any patrons coming to their outlets. So what we did was we actually leveraged on our internet banking platform. Currently, we have about 1,500 hawkers, we call it. They actually supply food. So we are doing about 120 deliveries now through our platform. and we actually pick up the bill for the first 10 kilometers for delivery. So there is no longer this association that Islamic finance need to actually do it for a charitable purpose. There is also a business angle to this. So that's one example. The other example is typically what we do is we distribute zakat during the month of Ramadan or slightly before, right? So through e-wallet, we were able to actually distribute to students, about 3,000 of them, when they opened their e-wallet account, then we were able to actually transfer money into their accounts for them to use for their expenses, right? So what we have seen is that sometimes you're not aware of the real estate or the platform that you have until a situation like this is posed to you, and then you start to figure out how can you actually use that infrastructure to do good, right? The business angle will at some point materialize, but I think probably in this journey of discovery to test the platform, to do a pilot, I think it is possible. It is still small. I mean, we have about 1,500 on that platform that we're using, but if we want to expand it, I think probably it's going to be quite interesting. Yeah. So to my mind there are opportunities within periods such as this for us to test our existing infrastructure and capabilities.
Excellent. Leveraging of existing infrastructure that Islamic banks have globally to be able to reach those in need, and utilizing the social capital and the social funds a lot more effectively to be able to assist societies that are disadvantaged or are suffering from disaster, or not even suffering from disaster, but are in need in general. So well done to the banks as well that have been assisting and have started some sort of initiative that has been assisting those in need. Oz.
Thank you. I think there would just be three takeaways from me. Number one is we need to look at what banks, Islamic banks, can do now based on their licensing and the contracts that we have in Islamic banking in order to help people today. And that's kind of becoming really part of the real economy. I mentioned this idea of inventory purchase onto the balance sheet of banks in order to give relief for SMEs, just as an example, done in a way that protects our depositors and has financial stability for the bank. That's one. I think there's another point which would be a miss if we don't look at after this pandemic, which is looking at the supervisory environment for Islamic banks to ensure that the nature and principles of Islamic banking can actually be delivered, not just across the times when we don't have bumps, because it seems to be kind of okay when things are BAU, but when we have something like this, that we can actually execute and thrive like an Islamic bank would naturally because of its supervisory environment, and have a really good look at that. The last one is a kind of almost like a revival of how social capital is used and push the boundaries on what's acceptable. Yes, I completely agree with Professor Azmi around, look, science and technology. I'd actually go further and say we know that going forward people are probably going to have face masks, period, and they probably want permanent ones, and we should invest in factories that make those, even if they're do you see what I mean, even if it's a commercial requirement. And I would go even further to say that incentives are built in for people to channel money there. And we need to really look at that deeply and challenge each of the established norms on that in order for us to properly be able to unlock it and bring it into the economy to help everyday people and society in times like this. So those would be the three takeaways that I'd put in for the end of this session.
Excellent, excellent. So real economic initiatives supported through Islamic finance with enabling regulation, as a summary of what you've said. And that will actually take Islamic finance further, moving Islamic social capital or social capital to the forefront of Islamic finance, and really benefiting communities with investments in all sorts of victims. So wonderful, and the enlightening aspects of the discussion have been quite spread out in terms of the economic impact, in terms of social capital, in terms of Islamic finance and the new norm, in terms of creating that difference and then uniqueness of what Islamic finance actually stands for. Yes, risk sharing and these aspects are to be discussed, and they will be discussed in future sessions. Unfortunately, the overall discussion today was focused on something else for those that have been asking about why we haven't discussed risk sharing. Of course, there is the economic impact as a whole that we need to talk about. Please look out for the next session. The next session would be on the impact of COVID-19 on small businesses and how Islamic finance can support these small businesses. So it will be a focus on SMEs. I know Oz raised it, Dato Rafique mentioned it, Dato Azmi talked about community support as well. So SMEs are a core aspect, fundamental to an economy. We're going to be looking at that and how Islamic finance can support that. Thank you very much, the honorable participants, for sharing your time, your knowledge, your experience. It has been most enlightening. And I'm sure that the panelists, more than 200 of them just on Zoom alone, and then it's gone out to Facebook Live. So it's reached a wide audience. I'm sure that it has been exceptionally enlightening for them as well. Thank you very much, Dato Azmi, Dato Rafique, Brother Arsalaan Ahmed. Thank you very much for your contributions and for your time. Assalamu alaikum.
Thank you. Thank you.
Thank you. Thank you very much.
Thank you.